Why did we come to the topic of order blocks? Because we want to learn how to effectively use order blocks from zero to a truly professional level and to master them thoroughly. What exactly should we do? What should we learn? Dear friends, as you can clearly see here, we start from the fundamental definition, then move on to entry points, stop loss, setting targets, and entering with a strategy or order block. Now, I also want to go step by step and use artificial intelligence today to cover everything from the very first thing it tells us to do to the last crucial points it emphasizes. So if you're looking for a complete video about order blocks and don't want to chase after fragmented videos after watching this, you won't need any other video or training about order blocks. This will take you from an absolute beginner to an advanced professional. All you need to do is stay with us until the very end. This is so important that I highly recommend you have your notebook and pen ready, or at least use your phone to take notes on the key points we'll discuss and learn today. I'll use artificial intelligence or ChatGPT and add my own valuable points and tips to it. Step by step, from the first to the last step, which is entry point, stop loss, and target setting with a strategy or order block, I'll go to the chart and show you each one, and we'll use AI here at the top. Let's start from the very beginning. First, it says, give a simple definition of order block and its difference from the opposite concept in simple terms. And what do we call the old opposite concept? What is it? What are the institutions and banks behind order blocks? Now, I want to break down these two important topics for you and explain them completely. Look, dear friends, here I've drawn an order block for you. For now, don't worry about what it is. Let's just look at its definition together. When we say order block, what is it exactly? How is it different from the old concepts? Even if you already know all this, please listen again, because sometimes things you've learned before will have new differences, and you need to review them to reinforce your understanding. The rest of the orders get filtered out, and then the main move begins, just like what you see here. Now, who have these large order blocks, these significant buy orders? They are institutions, banks, or what some call the big boys want to call them. The important thing is that someone has placed a large number of buy orders here, and we want to identify them. When the price returns to their order, move with them. So we've understood the first crucial point, why institutions and banks are behind these matters, and I've explained it to you clearly. When we realize that yes, the order block was backed by institutions and banks, the order blocks we've identified with this method have worked correctly. We understand that we've been able to work somewhat alongside the banks and institutions, which is very important and exciting because being able to identify this is a valuable skill. By the end of the video, you'll be able to have this ability. Now, let's move on to the next topic. Why are order blocks more reliable than traditional supply and demand zones? Look, I have a supply and demand zone like this. Usually these zones create a fake breakout and stop hunts. For example, if I want to take a short position here, they create a stop hunt because it's clear and transparent. In reality, there's liquidity behind it and they come and take it. But order blocks use more of the clear and transparent liquidity. They come and absorb this liquidity. As you can see, a valid order block can actually work in these areas and we can trade with it. So the next point that AI mentioned is about finding a valid block on the chart. Now, to find a valid block or order block on the chart, we have several factors to consider, which we'll break down and explain. First, market structure. The term might sound a bit complicated, but don't worry, everything will become clear. Most of you probably already know this, but we'll explain it further. Be patient. There's also boss or break of structure and its importance before the formation of a block, and the characteristics of a valid order block. We'll cover all of these. First, Let's go over these two, market structure and break of structure. For now, I won't go to the chart. I'll draw it for you here and explain. Imagine I have an uptrend like this. Let's make it a bit more advanced. Draw it like this so it's closer to reality. For an uptrend, what characteristics does it have? Very simply, if you look at the chart, you'll notice that in an uptrend, the lows are higher than the previous lows and the highs are higher than the previous highs. The minor pullbacks inside it aren't important. The major reversals are what matter. I've drawn these minor waves so you know the major reversals are important for us. So when the price corrects within an uptrend and reaches this low, you consider the last high. This is the last high. When this last high is broken, we say we have a break of structure or BOS. What does that mean? It means that once again, a new high has formed above the previous high, and the lows are also higher than the previous lows. This indicates that the uptrend is continuing. Now, in a downtrend, if you pay attention, what is its characteristic? The highs and lows are lower than each other, meaning this lower high is lower than the previous high, and this one is lower than the one before it, and so on. This low is lower than the previous low, and this one is lower than that. In the middle of this downtrend, you identify the most recent low for the break of structure. When this recent low is broken, we say a break of structure has occurred. Both the low is lower than the previous low, and if you pay attention here, the high is also lower than the previous high. This is the tip of the flash. Look, if I bring the tip of the flash here, it's also lower, and I realize that the high is lower than the previous high. So in a downtrend, when we say from within this, when the low is broken, we say a break of structure has happened. Here, when the high is broken, we also say a break of structure. So we've understood what a break of structure is and how to identify the trend. Higher highs and lows, lower highs and lows, which I'll teach you more about later along with other features. What does that mean? Look, from this specific point, if I say, for example, and I'll explain this in much more detail later, you can certainly identify which particular candle is the order block, but you must absolutely know what essential features it should possess. Not just any random candle that I might mention later. If I say, for example, I have an order block right here, this is indeed my order block candle, the very one you clearly see here. What exactly do they say? The very first thing it must inherently have, the primary characteristic, is that it must have effectively taken out the previous low. It must have decisively broken through the previous lows. This specifically means it has come down and successfully taken the available liquidity from behind all of these candles. You see, it has effectively taken out the lows of all these preceding candles. Secondly, after that particular candle, this is the first crucial option. After that candle, I absolutely need to clearly see significant strength in the market. There's been a very strong bullish move in the market, a powerful bullish candle, or perhaps even two, with virtually no wicks, just a strong, undeniable bullish move. That's the second important characteristic. As he precisely said, a sharp, decisive move with high volume, a strong, impactful candle. Usually before a sharp, significant move, there's a stop hunt and a liquidity grab from the opposing side. The other side was actively short here, and their stops were effectively taken out. So that's the third distinct characteristic. The fourth characteristic is that it has taken out a substantial amount of stops here. A great many stops have been grabbed here. Stop hunts have definitely occurred. So from both sides, one stop was taken from below and another one from above. This is a genuine stop hunt, not just a simple ordinary stop. So we've easily and clearly learned what essential features it should possess. Gradually, with these specific features, you're learning and understanding how to effectively find an order block from within the intricate price action. Let's carefully analyze it and see, yes, we can easily find valid and reliable order blocks. My ultimate goal is for you to work easily and efficiently in the market, to easily find order blocks, not to make it hard on yourself or unnecessarily complicate things. Now go and practice diligently. Don't make it overly complicated. Don't throw different unnecessary indicators on the chart. Just work simply and effectively. With these 3 or 4 fundamental features, you can find the rest of the order blocks in the market, but these are not all order blocks yet. Here, this particular candle has taken out previous stops and subsequently created 3 or 4 strong bullish candles. This could potentially be an order block. Later, price reached it and then went up. I'm not definitively saying it's an order block, but it certainly could be. Let's move forward. We also had a clear break of structure here, meaning there was a significant change of character here. Look, a change of character also happens when you have an established uptrend. Within that uptrend, you experience a change of character. When you have a downtrend, within that downtrend, you experience a change of character. Change of character is extremely important. Both break of structure and change of character go hand in hand. Look, here we also had a clear change of character. Both were distinctly present here. Let's find another compelling example. This candle, I clearly see, is lower than all the others. A clear stop hunt happened here. An excellent and precise stop hunt. It took the stops from behind here and then went up. Now look here. You decide for yourself if this could potentially be an order block in the future or not. We'll analyze it together as we meticulously go forward. Up to this point, the video has come. If you genuinely like the video, don't forget to support us, like and subscribe. Your comments are a special and valuable support for us. Please write any opinion you have below and hit the bell so you don't miss the next important videos. Up to here, what exactly have we discussed? Stop hunts and liquidity grabs. These were the essential features an order block should possess. We gave examples and said it could be like this. Let me show you again. This could also be an order block. This strong candle could indeed be an order block. Then price reacted and went up. All of these could be potential order blocks, but are they truly valid order blocks? That's what he tells us, and he can teach you whether you should trade them or not. Let's continue. Now he said, let's talk about the various types of order blocks. We have both bullish and bearish order blocks. It's very simple and straightforward. Reversal and continuation, either in the direction of the trend or against the trend. Now, if you wish, I can explain these in more detail. Learn these 4 distinct types so you know if you want to trade order blocks, you should know which specific order block you want to use, which one is truly valid, and which one is most suitable for your trading style. In an uptrend, if my order block is here and price reacts to it and then goes up, that's an order block in the clear direction of the trend. In a downtrend, it's exactly the same. If it's here, price reacts and then goes down, that's in the direction of the trend. Now, in an uptrend, I found an order block here, price reacts and then goes down, that's against the trend, a reversal. In a downtrend, I found an order block here, price reacts and then goes up, that's against the trend, a reversal. So these are the 2 main and fundamental types, bullish and bearish order blocks. Bullish specifically means upward movement, bearish specifically means downward movement. These are the 2 primary types. Learn these thoroughly so that when you want to find them, your eyes can spot them much more easily on the chart. Don't think these are unimportant. If we're discussing them, they are indeed important. All of these are like intricate puzzle pieces that combine so you can fully understand them. We said what essential features an order block should possess. I think you should write these down or take a screenshot. For example, OB means order block, a capsule that I can use to remember the key features it should have. First of all, we said it should hunt a series of liquidity, or as I said, LQ hunt, meaning a liquidity hunt. Like what we clearly saw here, price came down, took out the stops, and then went up. That's a perfect example. If we have an established uptrend, it should hunt these and then go up. So we consider that a valid order block. That's the hunt. The next crucial option, if the candles are strong after the hunt, the candles should be strong or clearly show liquidity. I call them power candles. I write power candle as a fundamental rule. What exactly does that mean? That means what you clearly see here, look closely here, these particular candles are quite strong. Indeed, 1 or even 2 very strong candles are prominently showing. What else should it absolutely have from our current price action analysis? Either a significant BIOS, which specifically stands for break of structure, or a distinct CHOCH, which means a clear change of character. So what precisely does BIOS truly mean? We explained the concept of order block in the previous session, and we said that it can also be a bearish order block just like this. We also said that based on price action, it can be a change of character or CHOCH. So look. Here I'm drawing it for you. This is boss and this is change of character or CHOCH. It should have these 3 features, right? I'll add another feature for you guys. It should create a gap or FVG. We'll explain this more fully in a bit. Let's go to FVG, the ones we've identified. Let's take them from the screen. I'll also explain what FVG is. Let me draw it here and teach you. If I have a bullish candle, which is my order block, and the next candle forms above it, and the next candle looks like this. Look here. This is its shadow, and the price has a lower low, right? Between these, this is the high of this one, and this is the high of this candle. The high of the first candle and the low of the third candle should have a gap between them. See, there should be a gap between the body of the candle and the next one. That's when we can say this is an FVG gap. I say this order block has a gap. This order block, we call it FVG or gap. Now, if the shadow had come down to here, then it wouldn't have a gap anymore and its validity would be reduced. The gap shows that, yes, there was real liquidity in the market. So this is our discussion about the gap. If the gap is important, we can use it to understand what's going on. Remember these 3 or 4 rules. Now, let's see, according to what we said, let's look at a real example with AI. We'll look at valid and invalid order blocks together, dear friends, and then we'll gradually get closer to the entry steps. How should our entry be? There are 4 ways we can proceed. Let's go together, dear friends. Let's check all these rules on the chart together. Let me take a screenshot and let's first find them, then remove the ones that are wrong together. This one too, let's see if it can be an order block, especially with an internal break of structure.
We'll review those same rules together later, my dear. Let's go back again. Here, this could be a counter trend order block. Look, the trend is bullish. It could hit this and then drop. That's possible. Now, the way to draw the order block zone, I'll explain that as well. This small single candle here could also possibly be one. We need to check and see if it's real, if it can be an order block. We've already identified this together earlier in this video, whether this can be one or not. We've looked at 3, 4, 5 examples. So what are our 4 main rules for identifying a valid, real, or fake order block? Look, the first rule we said is that there should be a liquidity hunt. It should have come and taken out some liquidity with liquidity sitting behind it. It's simple, you can understand it. These are the rules. This one did it, so it checks the first box. It should be a power candle, strong candles. The candles are strong, honestly. There should be a break of structure or change of character. It had a break of structure or change of structure, right? It should have an FVG. FVG, guys, can't really add much to the validity, but marking it isn't bad. Look at the gap between these candles, the high of this candle to the low of the next 2 candles. This one came down, so it doesn't have an FVG. That's why I can mark FVG2 as well. We can mark more than one FVG. Write down these points. FVG2 is also possible. The gap from the high of this candle to the low of the next 2 candles. When you look at it, there's a gap here. The body of this candle. It's that simple. Now we understand what it is, my dear friends. It's really simple. This topic is very simple, dear ones. Either you get a reaction on the order block itself or on the FVG. You've learned how to mark the FVG. For the order block candle, just take the whole candle. Don't worry about the middle, top, or bottom. Don't make it hard for yourself. Just take the whole thing. This order block was valid. It had all 4 features. You marked its FVG too. The price reaction is either on the FVG or on this. At the end of the video, we'll get to the stop point, entry point, target setting, and the rest. So this first one checks the box. Let me tick it off. Let's find a check mark here. This first one got checked. What's the next one? Let's bring our criteria here and look at them together. Okay, liquidity hunt. Has it taken out any liquidity? Has it taken out their liquidity? Power candle. Does it show us the strength of the candles, the momentum in the market? Yes. Does it have a break of structure or a change of character? Yes, it does. That's correct. Does it have an FBG or not? Let's determine that ourselves. From the very first candle to its end, the candle with the lowest low. Look, this is the FBG. from the high of this candle to the low of the next two candles. That's the FBG. It didn't have one here, but from here to here, it did. See? From this point to this point, it was an FBG. This is correct too. So we found two valid order blocks. One of them has already reacted, meaning the price has currently reacted to the FBG. Now, I think by the end of the session, we'll see whether this really moves up or not, or if it doesn't move at all. Next, let's bring in its rules. Has it taken out any liquidity? It hasn't really taken out any specific liquidity. Look, in an uptrend correction, there hasn't been anything here for it to take out liquidity. It's not interesting, so this one gets eliminated right here based on the first rule for me. Now, the next rules, it does have a power candle, honestly. It does have a break of structure, and it has an FBG too. But it's really important that it takes out liquidity first. That's the most important. So I'm eliminating this one. Next, we have two more here. I want to check these two. I want to analyze them and see what they're like. All right, now let's check it together with the chart. Listen to this part carefully. It's a kind of practice in itself. The point is, with its name, you'll be able to work better, you'll be able to work more beautifully. These things are important, my dear friends, so keep them in mind. I think you should watch until the end of the video. Now, look at this part here, this one. What about this one? Well, there was a liquidity hunt here. There was a lot of liquidity behind this. It took it. And the power candle is really strong. There's a boss, a change of character. Is there an FVG? Is there an FVG? There's also an FVG here, my dear friends, from this area to this area. So what can we give this one, dear ones? We can check this one off too, and it has already given its entry. My dear friends, what about this one? If we want to check this together, well, the first thing is the liquidity hunt. It hunted the liquidity. There was a big liquidity here and a bit here, and it hunted it. It's not very clear. It came down a lot. The trade is a bit shaky. You see, now that you've seen an example, you understand it's a bit shaky. There's a power candle, there's a power candle, there's also a break of structure. This wave doesn't have an FVG. We can say it's 50-50. Not very reliable, not very unreliable either. We can almost say 50-50. If it were me, I wouldn't trade on this one. So for now, I'll cross this one out even though it came, and this itself was the entry for the next order block. The entry was here, and it went up. Let's move forward. Let's see what else we have. The things we marked. Here, we have another one here as well. Hey, look at this. Liquidity hunt happened behind this. There wasn't much surface liquidity, but it kept coming up and hitting the liquidity here. Kept hitting this one. So we can count this as a power candle. A breakout of structure happened. It has an FVG from this high to here. Look, let me draw this for you so you can see its FVG. From the high of this candle to this low, either it drops itself or its FVG comes close and then shoots up. So this one also gets checked off for us. This one wasn't bad either. Actually, not just not bad. It was good, even great. We had two more here. One was a reversal, meaning, as we discussed, it's the opposite of the trend. So if the price comes and hits this, it should drop. Let's check together. Its order block, its liquidity hunt. The liquidity behind it has been taken, but it doesn't have a power candle, so here it doesn't get checked, it gets crossed out. There's no power, meaning there's no clear strength or liquidity in it, my dear friends, so we cross this one out. Hey, what is this? Liquidity hunt. The liquidity here is clearly and transparently taken. The power candles have relatively good strength. Here, break of structure. This wave came here and broke the structure in these areas, which is quite valid. Look, this high couldn't break the previous high, so for me this is considered invalid. It had power, but it didn't have a break of structure. The internet just cut out for a moment. Let's wait a bit until the internet comes back, my dear friend. Where were we? We were here, so this one also gets crossed out for me. Why is it crossed out? It didn't have a break of structure or a change of character for me. It also didn't have an FVG, not even a second FVG. It's invalid. Let's clarify that again, Richard. I think that's all we had. So now with this image and these rules, you understand which order block is valid and which is invalid. Right here, we easily identified the valid and invalid ones together. Extremely simple, extremely straightforward, and effective. Now, let's see. Since we've understood the types and shown a real example on the chart, let's talk about finding them on multiple time frames. Finding them on the HTF and entering on the LTF. HTF stands for higher time frame and LTF stands for lower time frame. What does that mean? It means that what we did, you can do in another way. Look, let me go to another symbol. For example, let's say I go here to this symbol. It says, for example, go to the 15-minute time frame and do exactly what we did. Find the order block. For example, this is the order block on the 15-minute time frame. Let me reset it for the 5-minute time frame as well and mark it. Here's its FVG. Actually, I think it hasn't really given it. Come to the 5-minute time frame and then trade on this particular setup. This is precisely how it effectively works. If you consistently do this, your entries will certainly be fewer in number, but your overall win rate will significantly go up. You first find the optimal setup on the higher time frame, and then you enter on the corresponding lower time frame. This involves combining order blocks with FVG, fair value gap, which we've already thoroughly talked about in previous discussions, and then confirming with the comprehensive volume profile. We have 3 entry methods: direct, confirmation, candlestick, and break of structure. Now let's go over these so we can wrap up this video. Learn not just the theory, but also how to enter, set your stop, and target. Learn everything professionally, my dear friends. So next, I want to explain the 3 entry methods to you. One is direct, one is candlestick confirmation, and one is break of structure on a lower time frame, or change of character on a lower time frame. Look, you find your order block. Let's explain these as well. Why should we draw the schematic? After all this time we've been drawing, what was it on? Was it on NASDAQ? Was it on Dow Jones? Was it on gold? Was it on gold? Yeah, that's it. So what does direct entry mean? Does it mean you consider this so reliable that you're absolutely sure about it? Where does that confidence come from? You need to do at least a 1-year backtest to see what has happened over the past year. Most of these, as soon as the entry signal appears, the price goes up and you enter the trade. We haven't even talked about stop loss yet, whether you should set an order or just enter as soon as it hits the level. There's another approach that says what? It says to use candlestick confirmation. Set it up so you get a candlestick confirmation on these. Getting a candlestick confirmation is really important. It's very appealing in my opinion. Keep an eye on this as well. Get a candlestick confirmation like a key bar so it tells you again that buyers have entered the market. This is another interesting point. What's the next one say? The next one says break of restructure time frame pointer. By that it means both break of restructure and change of character. For example, if your time frame is 5 minutes, look at the 1-minute time frame. If the price hits this level and then breaks the previous high, again, for example, here, see if this recent high gets broken and you catch the change of character here. Do you get what I mean? It's that simple. You've also learned how to confirm the change of character. So there are 3 confirmations. We've talked about all 3. Now, risk management in order blocks. If I want to explain this, look, no matter how good your order block is, no matter how solid it is, you still need to have risk management. You shouldn't risk more than 1% of your total capital there. What does it mean to not risk more than 1% of your total capital? It means that if I want to enter a trade here, and let's say the stop loss that I'm setting, just as an example, this becomes my entry point. For example, I'll learn later in the video to set my stop loss here, so the amount I enter or the capital I invest in this trade, whether it's crypto or global markets, should be such that even if my stop loss is hit, I don't lose more than 1% of my total capital. What does 1% of total capital mean? What does 1% of total capital mean? If my total capital is $100, what then? 1% of that would be $1. And if it's $1,000, that would be $10. It's that simple. So how do you set it up? We also have another video on capital management where we've explained everything in detail. There are tools and websites that can easily do this for you, almost like a robot. Just use them. You can watch all of them completely free on the same YouTube channel, my dear friends. So manage your capital properly. It's 1% of your total capital. Now, where exactly is your stop loss point? The exact location of my stop loss is just behind the order block with a slight distance. We talked about the entry point, and if we want to talk about the stop loss, it's just a tiny gap behind the order block, a small distance. That's the exact spot for my stop loss. So here, look, This is your entry for this question. Now, let's set the entry together with all the rest. If it reaches here, which it did, your entry will be like this. We haven't announced the target yet. This is how you enter. The stop is behind the order block. We haven't discussed the targets yet. The one we mentioned before isn't valid at all. This one is valid. You enter here and the stop is behind it. As for what it was, we haven't talked about it or analyzed it together yet. And those others weren't valid either. So from what we had, we've now understood where exactly we should place our stop for the order block, in which area it should be set. This point is very important, so keep it in mind. It's useful. The next point is about setting targets using swing highs, swing lows, and FVGs. What does that mean? Look, when you enter a trade, the AI or Hushang tells you that you can set your target in a certain way. How do you set the target? Look, swing highs and swing lows. What are they? What does it mean? Your last high is here, that becomes your swing. Your last low is here, that becomes your swing. This last high was here, so that becomes your swing, right? If this one isn't valid, for this you can put it here or here, meaning you should bring your target here and set it. Usually it gives you all of these. For example, one arbitrager has given 3, another has given 2, another has given 5. It gives you all of them, right? Or what else can you do? You can use FBGs to see if there are FBGs along this path. For example, from here to here, put an FBG behind this FBG. This one is empty. That one is an FBG because it might react to the FBG and bounce back. So we have easily learned where our target can be. Tracking the combination of order blocks with liquidity, stop hunt traps. This is exactly what I talked about at the beginning of the video. Guys, if I have an order block, for example, let me tell you, we said that regular support and resistance zones aren't that useful because there's liquidity behind them, there's capital behind them. For example, let me try to find an example for you. I want to give you a clear example. Oh, this is what I wanted to tell you. It was exactly here. Now, the order block itself wasn't valid, but I want to show you its combination with liquidity. Look here, if you pay attention, this order block is valid. You've identified it as valid. And it was from the 5-minute time frame. If you look closely, this was it, if I'm not mistaken. Look, behind this, there's a zone, a support. This is exactly what we marked. Now, let's go to the 1-minute time frame to make it clearer. What I want to tell you is, if you can combine it with this, it's amazing. Really amazing. I'm telling you, if you can combine it with this concept, in my opinion, it can be really useful for you. Good. This was an old static support resistance, right? If the liquidity behind this is removed, you create liquidity right here. Exactly what we did. In just 5 minutes, we came and formed this liquidity. How did we know? We didn't have any supernatural knowledge. With the things we've learned, we said, okay, this is an order block here. Then we see the order block. It's formed from here, right? This can increase its credibility. This is just one complete trade example for you, step by step. What are the common mistakes traders make regarding order block? This is also very important. Seeing an order block in every candle. Look, now that I've taught you about these order blocks, that was the example, and this is the example we have here. Keep this with you. Not every candle that has 1 or 2 similar features should be considered an order block. If you do that, you'll enter a trade, get stopped out, your win rate will drop, and you won't hit your target. Then you'll say the order block was bad. No. So definitely keep this in mind. Write this at the top of your notebook. Make it your plan. Don't consider every candle an order block. Trading without a break of structure, meaning without confirmation, is risky. It's saying, if you see a break of structure or a change of character, it's better to enter than just opening trades randomly, trusting a lower time frame block without confirmation from a higher time frame. What does that mean? It means that lower time frame blocks are less reliable than higher time frames. If you want to enter on the 1-minute time frame and find an order block there, even if you enter on that same 1 minute, it's not good. Find it on a higher time frame. Just like we discussed, get confirmation from a higher time frame. When you see that order block we talked about, and price comes and reacts to it and moves up, see what happens next. Now bring your view closer, make it clearer. So this is about not trusting order blocks without confirmation. Risk management. Guys, make sure to watch the video on risk management. My dear friends, it's extremely important, extremely useful, not just for order blocks, but for any strategy, any method that works. you can and should use it. There's nothing more important than capital management in the financial markets. No matter how good you are, if you don't manage your capital properly, you won't achieve consistent profits. The combination of these rules, I've explained it all here for you. Combining order blocks with concepts like OB, FBG, and liquidity, we've discussed all of these together and explained them in the simplest way. You've learned all of this clearly and transparently. Next is combining order blocks with footprint data and volume, and even this external footprint data. These are all kinds of secondary data, or what do they call it? These are data that TradingView doesn't provide us. If we can combine these with order flows, with footprints, with this kind of volume data, the win rate increases significantly. But on TradingView, we can't see these. These are actually level 2 data, which show us what's happening behind the market. In this data, we don't see these candles. For now, what you've learned is enough. It's useful for now, so don't worry, you don't need this. We've also explained these strategies for you. Higher time frame order block, lower time frame confirmation. What does that mean? It means find the order block on the higher time frame, then get the entry confirmation on the lower time frame. This is what makes a sniper entry. He himself said a precise entry, a sniper entry, is this. If we use this, it's a sniper entry. Let me give you an example. 1 or even 10 examples. We've already given you some examples, dear friends. We went through all of this together, step by step, from start to finish, in a simple way. That means all the information we had about order blocks, all the information that AI had about order blocks, we laid everything out for you clearly and transparently. We really appreciate you. May God protect your time.